Yo, 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 is T from OQP, and today, guys, I've got a back testing video for you. So, essentially, this is just going to be revealing how I trade in a way. So, you guys are going to get a ton of value from this video, and I really do hope that you enjoy it. So, I'm going to just click off somewhere random, perhaps here, and we're going to get right into it. So, one of the first few things I like to do as soon as I open up a blank chart like this one is roughly I like to see where price is going because I never like to trade against the trend. And if I've got a bias with looking at this right now, I would clearly say we are in the downtrend. And I can see that another confirmation for that being the case is us making these lower lows and breaking structure as we are doing so, right? So straight off the rip, what I can see because the way I trade specifically is smart money concepts, right? And off rip, what I can see is an institutional candle. So this was actually nice that we stopped right here. So I can see an institutional candle which is chilling right here. And the purpose of these up pushes, right? These purpose of these up pushes is to take out the liquidity from people that perhaps might have been trying to sell using this as a mini trend line, right? Sometimes it's a flat surface, it's flat as well. So it doesn't always have to be triangles like this. Sometimes it's flat like that. And then you have your liquidity, which is another word for stop losses or money, right? So as we have these two things that we've identified first, so we've identified our institutional candle, the reason for it happening, which was to clear the liquidity on this side. The third thing that I like to correlate with this also is a break of structure, right? So ideally, I would like for price to break this section right here, but it could be argued that us even breaking this little piece of information here, like this low here, is enough, but it depends how aggressive you're trying to be. So let me mark this off as a BOS because I think price is going to push through this and then make a retracement back up. So there we go. So we've got a BOS, right? Guys, you got to realize that we need all these steps for everything to come in together. So we've got our liquidity, we've got our institutional candle, we've had our break of structure here with a nice little close at the bottom. So all we would then do is set ourselves up with a position here, right? From the open of the institutional candle to the top, right? And you can let's do one to one as an example. The reason I have the Fibonacci and some of you guys are looking at the fib and be like, what kind of Fibonacci is that? The only reason I have it is just to mark off the 50% of this institutional push here, this candle push, and the open as well, because you can get one of two um, entries. You can either enter off the open of the institutional candle, or you can come in off the 50 of this institutional candle, right? So all we would then do after this has happened is, if we just play it here, is wait for price to come into our area. If it does, I'm sure it will, right? Fingers crossed. There we go. We're in there. Let's see. Hopefully it just goes all the way down to our TP. And in this example, we just had a nice little one-to-one. There we go. So it didn't actually come to a 50% this time. So if you are taking the safe option in coming in off the open of the institutional candle, the trade would have gone in your favor nicely, right? Um, I know you guys can probably see this is says 96 pips. The only reason it is that high is because of the time frame we're trading on. So bear in mind that we don't only trade on these higher time frames. We do, but we also trade on what, the 30-minute, 5-minute. Me specifically, I love trading off the 1 minute on gold because it's a pair that I've actually I would like to believe that I've mastered at this point because I have a lot more winners than I do losers, right, on that pair. So we can see clearly here, simple formula to get this working, and we're just going to keep time ticking here to see if any other setups come. So bear in mind, as this is now, as price is now pushing going forward, we are in a downtrend. So we got to remember we shouldn't really be looking for buys unless we were perhaps to break this little section here. But that again, we need to identify our proper range to make sure we're trading in the right confines. So I would consider this our range, in fact. So all a range is the area in which we're working in. So from the pullback to the new low. So let's see which side price decide it wants to go through first. All right, now we just wait. This would have actually been a nice setup here. I was looking at this, right? I was looking at this as price was doing its thing. So let me take this back for you guys real quick so we can do a nice little breakdown. So again, all right, bear in mind we are still selling here. We are still selling. So let me maybe come into the 1 hour. Right. 1 hour looked a lot cleaner on the two, maybe. Right. Okay. So again, we have this push up here. Okay. What would make this push more convincing again is if we have a BOS perhaps here. So let me maybe see if a BOS is to happen first before I show you guys this. Okay. I feel like it's okay. Let's go. Let's keep going. Let's keep going. Let's see if we have a BO. Okay, we have a BOS. I was a bit concerned that it might not happen right then and there. So we've had a little small BOS, and the thing is with this push up here, again, I can see the reason for it happening was to clear out the liquidity here. Okay, to clear out the liquidity here. So now we just put a money sign here, and oh goodness, hold on. All right. And if I measure this whole push up, so I'm measuring the whole push, guys, yeah. The whole push, yeah. You can see here as well, the whole push. So from the start of where we started pushing the candle to clear the liquidity, same story here from the bottom right here, from the start. So we have that identified. We have a mini BOS. A lot of people tend to prefer that it comes down a lot lower and then comes back. I'm quite similar in a sense, but I'm not too fast. So we have our institutional candle, we have our liquidity, we have our BOS, and again, I'll bring up my Fibonacci like I've done here, and I'll put in a sell position, perhaps maybe off the open or the 50%. This time around, I'm going to put it on the 50%. Just because of that BOS, I do believe that price is going to come here. Plus, we have a little bit of imbalance right here. I'm sure some of you guys know about imbalance, and I'd be looking maybe to take this for a. We could just watch it for 2 to 1, perhaps. Let's see. All right, 2 to 1. Let's see if price even comes to our area first on the 50%. All right, let's have a look. Okay, we're in there. Trying to drag this along. Look at that. Look at that, guys. Look at that. Do you guys see how pretty straightforward that bit of technical analysis was, right? So all we had to identify in this instance is the high time frame direction we're going on. So we were going in a downtrend. So when we're going in a downtrend, there's no need to be looking to buy. We then identified our institutional candle right here. The best thing to do in order to identify institutional candles is to not only look at the information just to the left of it. You can usually see either a level that's flat or a level that is like so, because you can get liquidity from trend lines as well as double bottoms or double tops. So in this instance, we've got two examples back to back, which is actually brilliant. So this first one, people would have been selling from this trend line here. So imagine someone has a position like so, like that, looking to sell off the trend line. They would have been taken out with this institutional candle, which is the purpose of the institutional candle. Likewise, again, some people might have seen this, ooh, double top. Then they start selling from this position right here. Right here, stop loss maybe just there. Trying to sell, look at that, they got taken out, and the reason they got taken out was because of the institutional candle, right? What we want to follow after that institutional candle is our break of structure. So us breaking the push, right? So this whole push, we want to break that. So this break is very essential in letting us know that price is highly likely to continue pushing to the downside if it comes back and mitigates where we want it to mitigate. And in this example, nice and clean, we came to the 50% this time. Even if you had gone in off the open here, you would have probably made a 1 to 1. Let's have a look. So it's not a 1 to 1 yet, but let me 1 to 1. Yeah, let's see that. Let's see if it does go to 1 to 1, because this is, yep, look at that. This is usually the reason I like to go to 1 to 1. on off the open, and this is if I'm certain that price is going to push really hard. So look, we still would have gone for our 1-to-1 here, which is beautiful. And if we had gone in off our 50, which we did initially, look at that 3-to-1 risk to reward. You put 100 on the table, you get 300 back. Not bad at all, right? So I'm going to keep pushing through, and I want to show you some more examples on NZD USD if they do pop up, and I'm pretty sure they most likely will pop up. Yeah, we're just going to watch price move. So look here, right? So price is actually let me take this off as I go along, just to keep the charts nice and clean. Okay, nice and clean charts. But you guys can see how simple that was. That was two back-to-back wins, which is pretty nice. We can see price is actually looking perhaps maybe like we're changing momentum with this little BOS here. So obviously we know price moves in a specific pattern. So this breaker structure could mean something that we're changing trajectory in the markets. If we break this, then I'm very much sure that we are pushing to the upside. So as price does this, let's just see what's happening. Let me go back on the two and play. Computer is just being a bit slow. Oh, that was interesting. Let's see. I'm still interested in sales here, guys. So, oh, damn. Right, okay, hold on. I did like this area. Up here. I'm trying to get some clean examples. Okay, this might be something here. Oh, as soon as I say I'm trying to get some clean examples, a nice one pops up. So again, my bias is still to the downside here, guys, right? And the only reason that being is because I believe if we look on the daily, if I'm not mistaken, if I zoom in here, we still have some areas we need to fill in down here. So where is this? Down here. Goodness, not here. Sorry, guys. It's ironic that I put it there and we still touched, isn't it? Look at that. Bow touch right there. But I believe price still needs to come down here. We have some imbalance here as well. And if we're to properly mark off our range, I would actually say that this is our range. Let me put this here, range. And all the ranges, guys, is the pullback and the high, the new high. So you can see pullback, high, high. So we've identified our range. Let me just make sure those are both locked in. Okay, so as we were looking on the 2 hour, right, I can see that there's this push of momentum, guys. And as we were just going through what I was just saying to you, we can see the information to the left. This was a double top. Some people would have been selling from double tops. So we identify our liquidity, we identify our institutional candle, which is right here. So like so, and in our mind, we're still wanting to push price further to the downside, right? So with that itself, us identifying this institutional candle, we have a BOS as well right here, which lines up with our open for the candle. So we have a nice BOS here. There we go. And we've broke below it and closed below it as well. And then I'll bring up my Fibonacci tool right here. Either have it off the open like so. And remember, guys, the stop losses are only that high because of the time frame we're trading on. It's usually easier to show examples of back testing when you're doing like on higher time frames, should I say. So we can either go in off the open or the 50%. So let's put in both positions. So if you're someone who actually will put in both positions, you can get 4-to-1 return on your trades, depending, of course, if it goes in the right direction. But this looks nice. And bear in mind before I just let this play, this is not going to work all the time. I think we know this as traders that none of our strategies are 100%. The only thing that gets us over the line for the most part is our risk to reward ratio. And if you've made it this far within your trading, I'm sure you understand risk to reward ratios at this point. So there we go. We got triggered in off the open. Let's see what happens here. Is it going to come to the 50 or are we going to hit stop loss? Are we going to go straight to TP? Let's see. Oh, there we go. This is a brilliant example in showing you guys that it's not always going to work out. But let's say we actually fumbled this trade right here, right? This one-to-one trade. We fumbled it. Bear in mind earlier, I wish I hadn't deleted them, but they are. Do you guys recall the two trades we won back to back? One was a one-to-one and the other was a three-to-one. So with us winning those two trades, this one trade only takes off one loss. So we still have essentially three wins in the bag and this one loss. So that's how we can end up capitalizing and building going forward. So I'm going to show you guys one more example on NZD USD and let's have a look to see how this one comes along. Okay. Again, we're just going to keep playing price. All right. Let's see what's happening. I quite like the information. Wait, the information in here. I'm gonna quickly zoom in and see what's happening. Okay, seems like this move already happened. So you guys again can see here, institutional candle. The purpose of that institutional candle, clearly a liquidity grab right here. I'm just marking this off before I go back to recent price action, and then you guys can see we got in right at the open this time. Yeah, this is where our BOS would have been right here. BOS, and you can see where I've marked this off. It would have been something like this. And if you had it in mind that perhaps price is going to keep pushing to the downside, you could have capitalized on this one trade and made a decent return. Look at that. And it's the same every time. Every time. Also, what you have to bear in mind, yeah, is that sometimes if we don't react off the 50% initially, we might come back and react to it in the future. So I'm going to put that 50% there and I'm going to mark it off here and I'm going to take price over to this side. So since we haven't reacted off the 50% yet and I'm still bearish, I'm going to put in a 50% sell here, right? And guys, remember, it's the same premise. Everything's the same and I'm gonna look to take price down quite a bit, right? Maybe up to here. Yeah, so 5 to 1. So let's see if this goes in our favor. If not, I'm just gonna monitor what's happening in here, just in case. Just in case we start changing trajectory. Doesn't look like price wants to come back up there because I can see that uh I can see what price was doing in here. Okay, so instead of me showing you that example, I'm going to show you this example that I've just seen pop up here. Didn't look like price was going to come to that 50%. However, sometimes plays happen differently as well. So we're going to quickly monitor what's happening in here because I've just taken price back again because I want to show you guys what I seen as price was moving. There we go. I would prefer we broke this a bit more. Let's see. 30-minute. Yeah, this looks beautiful. All right, I'm gonna take it back a little bit here. Little bit. And I'm sure as I've been explaining, you guys can already see where I'm headed right now. So institutional candle, we can easily see this. Look at it, guys. It's just so easy to identify, right? And what we have alongside that is some beautiful liquidity right there. So whoever was selling from there is now crying. So if we put this here as well, so institutional candle, liquidity, break of structure right here. Beautiful break of structure. Usually what I prefer is if it comes down with a lot of momentum. It's usually an indication to me that price is gonna keep pushing down pretty aggressively. So again, we have it like so. I can't recall. I, I believe I actually got in this trade, if I'm not mistaken. And I'll be looking to take price all the way down here. And guess where I'm taking price down to? I'm taking price down to another institutional level, another institutional candle. This is just the buy side of things. But we wouldn't buy this because we know that we're in a downtrend. So I could try put it all the way down here, see what happens. Yeah, let's see. So we have our setup. Okay, we're in the trade. This time we actually came to the 50%. Let me just stop that right there. Came to the 50%. So this is why you have to decide what type of trader you are, right? So you can either get in off the open, as I might have done here, or you can get in off the 50%. And the thing with getting in the 50, your risk to reward is so much nicer. So look at this. This is a 9 to 1 getting in off the 50%. So if you put 100 on the table, you're going to get 900 back. As opposed to if you get in off the open here, you put 100, you get 400 back. Still a nice return. Still a very nice return. But let's see what price wants to do here. And the thing is, don't be scared, guys. Yeah. As you see price retracing like it's done right here, don't be scared, man. Just let price do its thing, leave it alone, and then good things will happen to you. Okay. Just trust the process. So let's see. Let's see. Let's see. Does it go the way? Should do. But you never know. You never know. You never know. This is where I got a sell here, actually. I remember. I had a sell right here. So this is another push up here. So you can actually add in positions as you keep scaling in. Go. And this is, I can see it without having to draw on. This is a push here. There's a liquidity right here. There's a breaker structure that's just happened there. And then we look to take price to where I think price is going to. And this is a 3 to 1. So imagine that 3 to 1 on top of your 4 to 1. That's then 7 to 1. You put 100 on the table, you get 700 back just because you were watching structure. So let's see. Look at this. Beautiful. Beautiful, man. This is absolutely beautiful trading. So, guys, the this method that I've just shown you is literally how I trade. And it seems simple enough, and it really is, but at the same time, you guys have to put in the work in the charts. You got to be able to identify how structure works. You just got to put in time. The markets are a puzzle, right? It's a puzzle that's constantly evolving. And if you can get a grasp of how it moves or the algorithm, you will be very profitable. It's taken me a long time to get to the position where I'm in now, where I can actually teach people and make it fairly simple for students to understand such and such, but it takes time, right? And this for me is the simplest way to trade smart money concepts. Um, but yeah, I hope you all enjoyed the back testing session. Don't be afraid to let me know what else you would like to see. I hope you get a lot of value from this video because I'm sure you will. But besides that, follow us on Instagram. Uh, Head over to our website, see if you're interested in any of the packages we've got. And I will be making more videos very soon. Hopefully, have a face cam very soon as well, so you guys can get a bit more familiar with how I look and my facial expressions as I make these trading videos. But besides that, you guys have a great morning, day, or evening, and I'll catch you guys in the next video. It's been Tatenda from OQP, and I'll catch you guys next time. All right, peace out.